Okay, welcome to the presentation of the first half-year figures of Hypoport SE 2022. As you may know already, Hypoport was growing in the first half of the year, double-digit, strong growth, top and bottom line. All four segments delivered this strong growth, led by the credit platform and there by the mortgage business. And there we are already talking about market, because market influences us now. We roughly every third German mortgage goes through Europace. So when market is up or down, we feel it. For the first half of the year, we saw a plus 10% in the German mortgage market, reported by Bundesbank, with a stronger first quarter and a weaker second quarter. You can say this shows a little bit that there is some changes in this market, and all these different environmental issues have an impact. Each of them not. So we saw an upcoming recession in the market, but mortgage volume went up. We saw for a long time declining interest rate. Mortgage volume was slightly up, but didn't inflate. In the first quarter, we saw a strong rise in interest rate and mortgage volume was up. Second quarter was a little bit more volatile. Net we came down by 100 basis points again. So a third of this rise out of the first quarter. And this lead to, let's say, a more turbulent market. Because especially in times where interest rates goes down, consumers hesitate and wait for lower interest rates. As well, what happened in the first half of the year, real estate prices still were rising. For more than 5 months, they were still up. Just in June, they, for the first time for a long period, went slightly down. And this is an interesting moment here for the German market, because Germans feel for a long time that prices are too high, hesitated to buy for a long time because of this rise. And now that for the first time it's going slightly down, let's say it may change the dynamic. We see lots of properties coming to the market right now. With an interest rate down again, it's a good opportunity, or you still wait. And this will define a little bit how the second half of the year will look like. In general, German mortgage market is supported by 3 core elements. Refinancing, roughly you can say 30% of the market is stable. Just it's everything that was financed 10 years ago needs to be refinanced now, and this comes to the market automatically. We have new construction, part of this market, roughly around 15-20%, and as well pretty stable for long term. So even the extremely low interest rate of 2020, 2021, it didn't increase the construction side here in Germany, because it's extremely limited how much space you have for construction, how much land is available to build new constructions on. And this limits this market and regulates this market, and smooths as well this market down to its historical typical share of something around 15%. So then comes the transaction market, you can say, where people purchase an existing apartment, existing home. This represents 50% of the market, pretty stable as well. So just because interest rates are low, or recession is there, or something else, this doesn't trigger that Germans buy more or buy less. What drives them buy more and buy less is trigger events. So children's, divorce, new job triggers transactions. And this is all not a link to this typical core events, or this typical core figures of our economy. And this stabilizes the market heavily. So it's completely different from the Anglo-Saxon market, where this economic environment has a much more impact on the mortgage volume in the market. While outlook for the second half of the year is pretty difficult in this whole environment, what is certain is the long-term outlook for the German housing and mortgage market. We can be sure that because of the huge need of labor in Germany, we will have a net migration to Germany. A couple of 100,000 young people come to Germany every year from the south and the east of Europe. They need housing. Renting market is more or less closed because of regulation. It's heavily overregulated and doesn't deliver solutions anymore. There's no turnover anymore in this market. So most of this pressure when it comes to the market needs to be solved in the purchase market, in the ownership market, and their prices can freely float. And the only short-term issue may be that it takes long for sellers and buyers to find the new price level. On the long term, there needs to be a lot of transactions to bring the families which comes here to Germany into their homes. And with this comes increasing mortgage transaction numbers and increasing transaction volumes here in Germany on a long run. And this is, from our perspective, pretty certain. So talking about this long-term perspective, just we look on the long-term development of Europace in the mortgage market here in Germany. Double-digit growth for the last 20 years, you can say. In the first half of the year, it was 14%, slightly above market. You can see that we have more brokers here, and especially when there's a lot of business in the markets, banks prioritize their own branches still and let's say reduce the inflow from the broker side to not exceed their service levels too much on the loan offers resources. But let's say it's a double-digit growth, and it's a growth above market again. And we saw, especially in the second quarter already, that when markets are getting more difficult, banks fast open up again, and brokers are gaining faster market share again and outperforming branches even more. As well up personal loan business, pretty stable market environment. We were up 46% in the first half of this year. So nice support from this side as well. As well, nice support the area of corporate finance, something we entered pretty new in the last couple of years, and we are scaling it with a lot of backwind from special subsidy programs of still the old government initiated last summer. We had an extremely strong first half of the year. We could make a lot of new connections to corporates here. We could launch our marketplace and expand now the reach to other sales forces. So we are progressing here. Outlook as well a little bit tricky because there are a lot of challenges for German Mittelstand as well. There's inflation, energy lag. We see disrupted delivery change, and this creates a tough environment to decide for new investments. We are waiting for the right programs of the new government to support all these necessary changes here, and then Capital is there to bring this money to the companies which need it to ramp up German economy. We can do this, and we need to do this. Okay, all in all, very strong first half of the year for the credit business. Don't expect that the second half of the year will look similar. This was a great headwind here, and second half of the year we will have more challenges, especially short term. And let's see what the environment is doing. Next division, private clients as well, historically on a strong growth path, delivered even 18% revenue growth in the first transaction volume growth in the first half year of 2022. So in line with the long-term perspective. In this market where partially it was a lot of business to do, partially it was getting more difficult, it was slightly more difficult for us to recruit new advisors. Usually we are at 10% plus on a yearly basis with advisors. We are down here now to 3%. We will try to ramp this up in the second half of the year by again promoting in a more difficult market environment what the franchise network with a strong brand like Dr. Klein offers you as an advisor to have a prospering business. Top line growth as well, double digit for the private client division. Ebit margin slightly under pressure, coming from an extremely high level because of an amazing way how Dr. Klein could use the pandemic environment, the remote environment to save costs. And now with the normalization of how business is done, some of the costs for events and for traveling are coming back. What we keep doing is investing heavily. In the last year, it was 45 million. This year, it will be, for the first half, something around 25 million. Half of this going to the credit platform with all the different product lines. We heavily invest in IT resources to build new platforms, like for corporate finance. And we heavily invest in sales resources to bring new clients on the platform, onboard them, and make them productive so that the new transaction volume is added to the platform and we gain market share. Two new areas where we invest, just short for you, real estate. We expand along the value chain of residential properties, getting closer to the transaction and valuating them and integrating this all in a one digital workflow. And we are heavily investing in the insurance business, and a market which is now pretty calm, not stressed at all, but where we are, with our approach to fully digitalize it, are still in a long investment phase. And in muddy waters there. For the group as a total, as already mentioned earlier, massive top line growth and massive earning growth. This all in the long-term perspective. We deliver double-digit growth in, let's say, normal environments when the markets are growing slightly as well, when the markets are shrinking slightly as well. And we will keep doing this for the next years. Medium to long-term outlook is we continue exactly this journey. Thanks for your attention.